Welcome to LexTalks Legal Topics Simplified, where we introduce you to the basics of Indian law.
Mm-hmm.
Today, we're diving deep into banking frauds,
Right.
prevention and mitigation,
Right.
a topic that's both fascinating and incredibly relevant for aspiring legal eagles like yourself.
Absolutely. It's a field where law, finance, and technology all kind of come together
Yeah.
and create this complex landscape that we need to unpack carefully.
Okay, so let's set the stage.
Okay.
We've got a ton of information here,
Yeah.
from articles on the evolution of banking fraud to the RBI's guidelines on customer liability.
Mm-hmm.
But before we get lost in the details, can you paint a broader picture for us?
Sure.
Why are banks such attractive targets for fraudsters in the first place?
Well, you got to think about it. Banks are the custodians of our entire financial system, right?
Right.
They handle vast sums of money every single day,
Yeah.
making them prime targets. But it's not just about the sheer volume of cash.
Right.
The intricate systems and processes that banks rely on, the inherent element of trust they operate on these can be vulnerabilities that seasoned fraudsters know how to exploit.
So it's like a fortress with incredibly strong walls,
Yes.
but maybe a few hidden tunnels leading in.
That's a great analogy.
Yeah.
And just like with any fortress, there are multiple ways to breach its defenses.
Okay.
Some are surprisingly straightforward,
Okay.
like the age-old tactic of check fraud.
Check fraud.
Yeah.
I thought that was a relic of the past.
You'd be surprised how prevalent it still is.
Really?
Fraudsters are constantly devising new ways to manipulate checks, forging signatures, altering amounts,
Wow.
even engaging in something called check kiting.
Check kiting.
Oh,
That sounds more like a leisurely pastime than a criminal activity.
it might sound harmless,
Yeah.
but it's a sophisticated scheme that preys on the delays in interbank fund transfers.
Okay.
Essentially, someone writes a check from an account with insufficient funds, deposits it into another account at a different bank,
Uh,
and then they exploit the time it takes for the first bank to realize the check is bad, essentially creating money out of thin air, at least temporarily.
that's devious.
Yeah.
It really highlights how criminals exploit those gaps
Right.
in communication and verification within the financial system.
Exactly. It underscores a recurring theme in banking fraud,
Yeah.
exploiting systemic loopholes and delays to gain an illicit advantage.
Got it. But in today's digital world, I imagine online fraud is a far greater threat.
Absolutely. The rise of digital banking has opened up a whole new frontier for fraudsters.
Oh, yeah.
We're talking about phishing attacks,
Mhm.
where criminals try to trick you into revealing your sensitive information through fake emails or websites disguised as legitimate banking platforms.
Oh, I get those phishing emails all the time. Luckily, I've learned to recognize the warning signs.
That's great to hear. Awareness is truly your first line of defense.
Right.
But remember, these scams are becoming increasingly sophisticated, often mimicking legitimate communications so perfectly
Wow.
that even tech-savvy individuals can fall victim.
That's a bit unsettling. What
Yeah.
other online threats should we be wary of?
Well, there's malware designed to steal your banking credentials lurking in seemingly harmless downloads or links.
Why?
Then there are those seemingly enticing loan offers that lure you into handing over your personal and financial data only to disappear with it.
Mm.
And of course, there's the ever-looming threat of identity theft, where criminals can assume your financial identity to open accounts, take out loans, and wreak havoc on your credit history.
Identity theft is terrifying. It feels like such a violation having your entire financial life hijacked.
It absolutely is, and it underscores the importance of being vigilant about protecting your personal information.
Right.
Never share your OTPs, PINs, or other sensitive banking details with anyone, regardless of how convincing they may seem.
That's a good point. It's easy to let your guard down when someone seems official or authoritative.
Right.
But what about those physical threats like ATM skimming?
Mhm.
Is that still a concern?
More than you might think.
Really?
Criminals use devices to steal your card details and PINs right from the ATM. They might attach a skimmer to the card slot that reads your information or install a tiny camera to record you entering your PIN.
So they're essentially creating a clone of your card.
Precisely. And with that clone, they can drain your account.
Yikes.
It's a stark reminder that fraud can occur in both the physical and digital realms.
Okay, so we've seen how these scams work. Now let's shift gears and talk about the laws designed to combat them.
Okay.
What legal framework is in place to protect us from these banking fraudsters?
India has a pretty robust legal system to address banking fraud, with the Indian Penal Code forming the bedrock. It criminalizes actions like cheating, forgery, and impersonation, which are often at the heart of these scams.
So if you get caught running one of these schemes, you could face serious jail time.
Absolutely. The law acts as a deterrent, making it clear that such actions have severe consequences.
And what about the RBI? Do they have a role to play in all this?
The RBI is central to this fight. As the Central Bank of India, they set the rules of the game for the entire banking sector. Their guidelines and regulations are designed to help banks prevent and mitigate fraud.
So they're like the referees ensuring everyone's playing by the rules.
That's one way to put it.
Yeah.
The RBI mandates robust, know your customer KYC procedures to verify customer identities and assess their risk profiles.
Right.
They also enforce anti-money laundering AML compliance to track the flow of money and detect suspicious activities.
I've heard of KYC and AML.
Mm-hmm.
Those are the things banks ask for when you open an account.
Yeah.
Like proof of address and identification, right?
Exactly. KYC is about establishing a customer's legitimacy, while AML aims to prevent the integration of illegally obtained funds into the financial system.
Okay.
These regulations are crucial in creating a more transparent and accountable banking environment.
And what about the Information Technology Act?
Mm-hmm.
I've heard that's being increasingly used to tackle cybercrime.
You're right. The IT Act is vital in our digital age. It covers offenses like hacking data theft and online fraud, providing a legal framework to prosecute those tech-savvy criminals who operate in the digital shadows.
So if someone tries to steal my banking details through phishing or malware, they could be prosecuted under the IT Act.
Absolutely. It gives law enforcement the tools they need to pursue and penalize these cybercriminals.
That's reassuring.
Mm-hmm.
But what about us, the everyday folks?
Hmm.
What can we do to protect ourselves from becoming victims?
That's where things get really interesting. There's a lot you can do on an individual level to minimize your risk, and that's what we'll delve into after a short break.
Okay, sounds good.
We'll be back in a jiffy. Welcome back to LexTalks.
All right, so we've laid the groundwork, understanding why banks are targeted and the types of fraud that are out there.
Mm-hmm.
But what really brings this to life
Right.
are the real-world cases. What can we learn from some of the biggest banking scandals in recent history?
There are unfortunately many examples, each with its own lessons.
Yeah.
One that really sent shockwaves through the Indian banking system was the Punjab National Bank. Okay.
Nirav Modi scandal. This involved fraudulent letters of undertaking or loose.
That case was all over the news. Didn't it involve billions of dollars?
Yes.
But I'm not entirely clear on what loos are or how they were misused.
You're right. It was a massive fraud.
Mm-hmm.
And lose is essentially a guarantee issued by one bank to another bank on behalf of a customer.
Okay.
It assures the second bank that if the customer fails to repay a loan, the first bank will step in to cover the debt.
Mm-hmm.
In this case, PNB employees allegedly issued fake loos to companies linked to Nirav Modi,
Wow.
allowing them to secure billions in credit from overseas banks.
So Modi's companies were using PNB's reputation to get loans they weren't actually entitled to.
Exactly. And the truly shocking part is that this went on for years, with the amount snowballing into a staggering sum.
Right.
This wasn't a case of a single rogue employee.
Right.
There were systemic failures in PNB's internal controls and risk management systems that allowed this to happen.
So it wasn't just about catching the bad guys.
But also about fixing the loopholes that allowed them to operate in the first place. What key lessons can we learn from this case?
The PNB Nirav Modi scandal exposed the critical need for robust internal controls, especially in areas like LUU issuance. Banks need multiple layers of verification,
Okay.
stringent authorization processes, and regular audits to prevent employees from circumventing the system.
It's a stark reminder that trust, while essential, can't be the sole safeguard, especially when dealing with such enormous sums of money.
Yeah.
Are there other cases that highlight the need for stringent internal controls?
Absolutely. The collapse of Yes Bank in 2020 is another prime example.
Okay.
While there were elements of mismanagement and risky lending practices, allegations of fraudulent activities also surfaced.
Really?
Loans were given to companies with questionable credentials, some even linked to the bank's founders.
So there were potential conflicts of interest and a lack of proper due diligence in loan approvals.
That's right. This case highlighted the need for strong corporate governance, transparency, and accountability within financial institutions. A bank's leadership needs to be held responsible for their actions.
Right.
And there must be mechanisms to ensure loans are being issued based on merit, not favoritism.
It seems like there's a recurring theme of deception and manipulation in these cases.
Yeah.
Are there any instances where outright accounting fraud played a role?
The Satyam Computer Services scandal back in 2009 is a textbook example of accounting fraud that sent ripples throughout the financial system.
Okay.
The company's founder admitted to falsifying accounts for years, inflating revenues and profits to paint a rosy picture for investors and
So
lenders.
they were essentially cooking the books to make the company look more profitable than it actually was.
Exactly. This led banks to extend loans to Satyam based on fabricated financial statements. When the truth came out, those loans turned bad, causing significant losses for the banks.
It's a reminder that due diligence isn't just about verifying a customer's identity, but also about scrutinizing the financial health and integrity of businesses seeking loans or investments. What happens if, despite all these safeguards, someone does become a victim of banking fraud?
Hmm.
What are their options?
That's a crucial question, and it's one we'll explore in detail when we return after a short break. Stay tuned.
Welcome to LexTalks. We've been exploring the intricate world of banking fraud, from the tactics used by fraudsters to the legal frameworks designed to combat them. But let's face it, even with the best preventative measures in place, sometimes these scams slip through the cracks.
That's unfortunately true. No system is foolproof, and fraudsters are constantly evolving their techniques.
So what happens if you find yourself a victim of banking fraud? What steps should you take, and who can you turn to for help?
The first and most crucial step is to immediately report the fraud to your bank. Time is critical in these situations. The sooner you report it, the better your chances of recovering your funds and limiting the damage.
So don't hesitate or wait to see if the problem resolves itself. Contact the bank right away.
Absolutely. Most banks have dedicated channels for reporting fraud, like a helpline or a specific email address. Provide them with all the details of the fraudulent transaction, including the date amount, how it occurred, and any other relevant information.
And what about evidence? Do you need to gather documentation to support your claim?
Yes, having supporting documentation strengthens your case. This could include screenshots of fraudulent emails or messages, transaction records, or any communication you've had with the fraudster.
So it's like building a case file, gathering all the pieces of the puzzle to present to the bank.
Exactly. The more evidence you have, the better. And make sure to keep a record of all your communication with the bank regarding the fraud, including emails, phone calls, and any reference numbers you receive. This creates a clear audit trail of your actions.
Okay, so you've reported the fraud to your bank. What happens next? Do they automatically reimburse you?
It's not quite that straightforward. The bank will initiate an investigation to verify your claim and determine the legitimacy of the fraud. They'll scrutinize transaction records, security logs, and other relevant data to piece together the events.
And how long does this investigation typically take? It must feel agonizing waiting for a resolution, especially when your hard-earned money is at stake.
The waiting game can be stressful, but the RBI has set guidelines for banks to resolve customer complaints within a reasonable time frame. For unauthorized electronic banking transactions, the resolution time is within 90 days from the date the complaint was received.
So there's a timeline in place, which at least provides some reassurance. But what if the bank's investigation finds you were somehow negligent? Like if you shared your OTP with someone or fell for a phishing scam?
That's where the question of customer liability comes in. The RBI has specific guidelines on this, and the level of liability depends on how quickly you reported the fraud.
So the faster you report it, the less likely you are to be held responsible.
Exactly. If you report the fraud within 3 working days of receiving the transaction alert, your liability is zero. However, if you delay reporting, your liability could increase significantly.
That really underscores the importance of acting quickly. But what if, despite reporting the fraud promptly, the bank still refuses to reimburse you? What recourse do you have then?
You have several options. You can escalate the complaint within the bank, taking it up the chain of command to higher authorities. Most banks have a grievance redressal mechanism to handle customer complaints.
So don't give up if your initial complaint is dismissed. Persist and seek a higher level of review.
Precisely. If you're still unsatisfied with the bank's response, you can approach the banking ombudsman.
I've heard of the banking ombudsman, but I'm not entirely sure what they do. Can you elaborate on their role?
The banking ombudsman is an independent body set up by the RBI to resolve complaints between customers and banks. They have the power to investigate complaints and issue binding decisions on banks.
So they act as a neutral third party to ensure fair treatment and resolve disputes.
That's right. They're there to protect the interests of customers. And if the banking ombudsman doesn't provide a satisfactory resolution, you can even consider filing a complaint with the Consumer Forum or pursuing legal action against the bank.
So there are legal avenues you can explore to fight for your rights as a banking customer.
Absolutely. The law provides you with safeguards and mechanisms to seek redress if you've been wronged.
This has been an incredibly informative deep dive. We've covered a lot of ground, understanding the many facets of banking fraud, the laws that protect us, and the steps we can take if we become victims. Any final words of wisdom for our listeners?
Stay informed, stay vigilant, and exercise caution in all your financial dealings. Knowledge is your best defense against fraud.
That's excellent advice. Thank you for sharing your expertise with us today.
It's been my pleasure.
And to all our listeners out there, remember to stay safe and informed. Thanks for joining us on LexTalks, and don't forget to subscribe for more foundational legal insights.